Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, the band is back together, counting you down to the closing bell. And here to help take us beyond the bell with our global simulcast, Carol Massar, Tim Stenovec joining us right now, bringing together our Bloomberg Television, radio, and YouTube audiences, and audiences, I'm sure, around the world that are just off every other platform out there. Carol, this is an interesting day here. We came in this morning, it looked like we were actually going to have a pretty decent day, and then we had some headlines about something going on over in Taiwan. Yeah. And then a little bit later in the day, we had Yellen making news here. What's happening?
Well, listen, I think that's it. You know, we just had a guest on, Ann Maletti of Wells Fargo Asset Management, talking about, listen, so much is priced in. And she said she likened it to investors have been at this party for a long time. And so now they're looking for more visibility. She's calling for about a 10 to 12% correction. So, yeah, I think, you know, that's going on. And then, of course, Tim, we had Janet Yellen just talking about overheating. Like, to use that kind of word, you know it's going to catch investors' attention.
Right. I mean, she's a former Fed chair, right? She has to know that when she says something like that, investors are going to react. But look, we've been laser focused on earnings. We got earnings coming after the bell today. Going into today, guys, more than 3/5 of S&P 500 companies have reported. 87% have beaten average analyst estimates. So it has been a really good quarter, Caroline.
But it also comes back, Tim, to valuation, because when you've had, for example, Lyft having risen about 150% since November, because everyone's already pricing in the fact that, Romaine, the numbers are probably going to look better because the world is reopening. Yeah. How much further have these stocks got to run?
And for all the fears right now about inflation, taxes, and all those other things, you still have an economic story that's still favorable to risk assets right now. It's one of the reasons, at least for our viewers, on the far right of your screen, you see the Dow Jones Industrial Average looking like it's actually going to close in the green. It's pretty much flat on the day, up about 11 points right now as we wait for it to settle. 34,128 Dow, Caterpillar, J&J, all higher here. The NASDAQ Composite going to end the day down about 1.9%. The S&P 500 down about 0.6%. And the Russell 2000 really couldn't get out of its own way today. Going to finish the day down roughly about 1.3%.
Well, let's go to the NASDAQ because we saw Applied Materials. We saw a lot of chip names, NVIDIA, Apple, also PayPal. Those were among the tech names really kind of holding down that sector. And I do wonder, Taylor, whether or not we start to see somebody say, well, wait a minute, now that stock's a little bit cheaper. Maybe I'm interested at this point. We'll see what happens tomorrow. This is one day of trading. We have to keep that in mind.
Yeah, and you're right. The stocks, though, entering into that 9% loss from the recent highs. So trying to get into that correction territory. So let's start on the bottom, Carol. For our radio audience, we're taking a look at some of the semiconductors, some of the auto equipment makers, some of the tech hardware companies. Those are off anywhere from 2.5%, 3.5%, of course, as you really get the likes of Apple dragging down this market. Anything with high valuations has been really put back into question today. Finally, I'll end on the gainers, and it wasn't a lot, but you have banks and materials that are up about 1%, of course, and telecoms up 0.6% as we wait those T-Mobile earnings.
All right, let's go to T-Mobile, crossing with their earnings. First quarter revenue, it is a beat, $19.76 billion. The estimate among analysts, $18.92 billion, so beating on the top line. First quarter adjusted EBITDA, $6.91 billion versus an estimate of $6.67 billion, and first quarter EPS, 74 cents a share. So what are we looking at that stock? Investors liking it, Caroline, up a little bit in the after hours.
Yeah, T-Mobile up almost 2% as we speak. We're looking across at Caesars Entertainment, talking about reopening trade at the moment. And we're seeing first quarter net revenue, $1.7 billion. Now, the market have been looking for exactly that, $1.7 billion. That is a rise of 260% team. So this is a company that's starting to see people coming back, wanting to spend, wanting to enjoy themselves. Of course, first quarter adjusted EBITDA coming in at $548 million. We don't have what that is in terms of expectation versus estimates, but clearly we are seeing growth overall, Tim.
You mentioned adjusted EBITDA. We can't help it. Await, of course, those Lyft earnings where you're really looking forward to that adjusted EBITDA positive numbers that were expected from Uber tomorrow and, of course, Lyft at any moment, Tim, today, and really putting back in focus some of the profitability issues that we've seen.
Yeah, with Lyft, the big question, guys, is how the company is actually enticing drivers to come back at the same rate that passengers are coming back. There was a Bloomberg Businessweek story last week that says they got to pay these drivers more in order to incentivize them to do that. That gives a hit to the bottom line, Romaine.
Yeah, and I want to go back to something, Carol, that you were talking about, and with the big tech earnings here, because we did see, the big tech companies and the stocks, and the move down we saw today at Apple, a 3.5% drop. You have Amazon, Microsoft, and pretty much everything in that space right now moving lower. And there's a broader question here because, I mean, people are sort of reaching for something that they can hold on to. So people are looking to materials. You got Sam Zell buying gold. You got Meek Mill buying Dogecoin. And you got a bunch of other people sort of looking to sort of anything other than tech. Tech used to be the fallback, Carol. No. I mean, we laugh, but that used to be the fallback. That was the defense.
It's a good point. So listen, a lot of tech names didn't do so well, but what's interesting is Gartner, which covers so much of the tech industry, right? We always refer to their research reports. It had a banner day, a bullish day. Certainly, if you weren't shorting the stock, you had a good day. It was up about 12.5%, your number one gainer in the S&P 500. It's on such a tear, up about 40% this year. Sealed Air, ticker is SEE, your number two gainer that I'm looking at, up about 8%. They boosted their fiscal year adjusted EPS, beating estimates. Cirrus Logic, watching those chip names. This was on Romaine's list of analyst calls today. That stock up about 2% today after Needham raised their call on that company. And then Co-Crystal, I like to look for something a little bit different. Number one gainer in the NASDAQ. And this, as you saw, a lot of day traders flipping millions of shares on this company.
Carol, you got the decliners. You got the companies that move up. I got the laggards. I got the decliners. Ferrari, among the ones I'm keeping an eye on today, down more than 6%. The company delayed a long-standing earnings target by a year due to the pandemic. Smile Direct Club finishing the day down in the double digits after the company said it had a systems outage that was caused by a cybersecurity incident. Moderna, one of the vaccine makers we follow closely, it is up 65% year to date, but it slid today. That it comes against the backdrop of the company's chair saying that it's testing lower dose vaccines in order to boost supply. And then IPGP US, that company sliding today, the laser manufacturer, announcing that CEO transition and forecasting second quarter revenue and EPS that missed estimates, Taylor.
You know, I think there was actually a lot of bond market in the yield. There was a lot of movement within the bond market. Spit it out, Taylor, of course, as we got those comments from Janet Yellen. And you saw some of the shakeout within the equity market, but it didn't really translate to the bond market, Romaine. As you can see, you're only down 1, 2, 3 basis points.
Well, what's the effect on the bond market here? You got Yellen at a Wall Street Journal conference now saying that she expects full employment to actually happen pretty much right away here. I mean, what are we talking about? And why? I mean, and what's happening here where we're getting to a stage now where we're getting all of this commentary out of the Treasury Secretary, but we're not hearing that same commentary out of the Fed chair.
Liz on Sunders, Caroline, I know we want to get to Liz, that it is way more complicated than having her do the work for Jay Powell.
We're coming back to Yellen.
Lyft first quarter adjusted EBITDA loss 73 million people. The estimated loss for 143 million, so better than expected, a lot better. The loss is half of what had been expected overall. So they are seeing an adjusted EBITDA loss, but an adjusted net loss of 114 million. The estimate had been for 166 million. So in both those measures, they are doing better than had been expected. And the first quarter active riders, 13.5 million, still down 36% year on year, but it is improving. We're seeing that stock up 5% after hours right now, Carol.
Yeah, what's interesting is, though, this stock has been on a tear. It's up about 140%, 150% since early November. Is this enough for investors, Tim, in terms of what they're looking? They're going to want visibility. How are things going, and what's the outlook look like?
And look, this is a play, a bet on the U.S., especially compared to its peer Uber that has much more international exposure. So if you're bullish on the U.S. and the reopening here in the U.S., Lyft is certainly a play that appeals to that. I think the big picture, too, guys, it goes back to getting those drivers on the road. There's so much commentary about how these companies are thinking about these drivers, contractors versus full-time employees. A decision like that, Romaine, can change the company's outlook at the drop of a hat.
Yeah, and Tim, and I forgot who brought it up earlier, this idea here that you're not really seeing the big pop in shares for companies that actually do sort of meet that bar that investors are looking for. One reason why you're not seeing that pop is the macro story. I mean, these companies can post all the profits they want, or at least do a little bit better in the case of Lyft does with regards to its losses. But at the end of the day, if the macro story doesn't sync up, or if people think that's going to erode any gains down the road, it doesn't matter what they post.
And talking that macro story, you said, let's go back to Yellen, let's do it, because this is a story of, well, Lyft looking to boost its drivers once again. And if Yellen's saying she expects full employment next year, Taylor, full employment, what measure of full employment is that? We know that the Federal Reserve has a much broader view of what full employment is now. It's not just perhaps, you know, a level of 4%, 5%. It's about whether those have been left behind in previous cycles, the women, of course, minorities, whether they also are managing to get roles, and we see the participation rate go up.
And there has been a huge focus, of course, on ignoring some of those inflationary effects to really, Tim, focus on this employment level. But once again, and look, Liz Ann Saunders is the expert. It's not me. But Janet Yellen knows the impact that she has on these bond markets. And these comments today certainly seem to bring up the fact that we are trying to signal something that is different than what we might be hearing from the Fed.
And she's clarifying her comments from earlier about the rate increase, saying she's not predicting or recommending rate increases.
She's not the Fed chief.
Well, yes, I know. That's my point, Carol. What is this? She is a White House administration official, and she's talking about what the next steps for monetary policy are.
And a former Fed official. She knows her words are going to carry a lot of weight here, Tim.
She does. And we should know, Yellen says that she's not predicting or recommending rates increase. Yellen says she expects full employment next year. When Jen Psaki is asked about Yellen's comments as Treasury Secretary, not as Fed chair, when it comes to interest rates, when it comes to inflation, at the White House, you know those comments are certainly making waves.
Why do we need to hear that?
You know she was sitting in the press room, and she's like, what? Janet Yellen said what?
You harken back to the great biography that Sebastian Mallaby did of Alan Greenspan, talking about master manipulation, conveying the words to the media so that the media and the bond markets would do the work for the Fed chair. I'm not going to speculate that this is happening, but the words carry weight, Carol. They carry weight.
Well, we saw that
assets as well. Yeah. Dollar today, a story of dollar strength, and even with dollar strength, you still see commodities push high, still see inflationary pressures within corn, for example.
That's a really good point. That commodities were on quite a run in today's session, so that really tells a story as well. All right, that's going to do it for our cross-platform coverage, taking you beyond the bell here on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you back tomorrow, same place, same time.